Absolutely. So INX is a provider of digital assets listing and trading solutions. The firm was registered or incorporated in 2018. This was in the wake of the ICO bubble back then, when people, companies, DAOs, anonymous people were just raising millions of dollars on the back of a white paper. And the founder of INX approached the United States SEC with the vision of being able to create a capital raising platform leveraging blockchain technology, but it would offer investors the same tried and tested protections that you would expect and that the SEC has put in place for years. And this approach was basically defined through an IPO, an F1 prospectus, whereby INX was aiming to raise capital to build a trading ecosystem, a listing ecosystem, capital raising, underpinned by blockchain technology, fully regulated, fully licensed, and basically usher in a new era of regulated digital assets. So we were successful in actually getting that approval from the United States SEC. It wasn't without toil. It was about it's just under 3 years of back and forth, probably over $1 million and lots of blood, sweat, and tears. But effectively, the INX F1 prospectus became approved, and it was the first ever blockchain IPO in United States history. It was a great success. We raised $84 million or thereabouts from 7,200 retail investors in 65 countries around the world. It basically proved the model, right? You can do a regulated ICO, we call it a security token offering, and raise capital from investors all over the world, pursuant to United States SEC regulation. So we then, armed with those funds, we then acquired licenses. So INX is a broker-dealer. We are licensed to run an ATS, which is a trading platform for digital securities.
Hey, Bob, can I stop you for a second? This is basic stuff for you, I know, but I just want to make sure we're not losing the audience. So that the IC is sometimes dubbed an ICO, you're a security token offering. There you were giving digital tokens that were claims to equity ownership in INX itself?
So the beauty about security tokens is they can represent equity, but they can also represent things like revenue streams or profit share.
Sure.
So in the INX case, our token represents a 40% share of future profits. So if you think about that, it's basically a non-dilutive way of raising capital where you're not giving away equity. You're basically bringing in working capital with the view to then pay out a share of revenue or profits to your investors. So that's what the INX token entails. But we could easily have configured it to be an equity token or have other rights, and not just financial rights. You could have utility benefits as well for holding a token like that.
Okay, so sorry, I interrupted you, and then you were saying that once you raise that capital, and then the things you got licenses.
We basically went, we acquired a couple of businesses, a broker-dealer with the ATS. We acquired a transfer agent. We also engaged all of the states and jurisdictions in the USA to acquire money transmitter licenses. We literally just received Nevada about a week or two ago. So we now have, I think, 49 money transmitter licenses, which is pretty good. And so INX effectively has become one of a very small number of firms, we're talking less than 10, that are licensed in the United States to offer both cryptocurrencies, trading, as well as digital securities, and the primary offering platform for raising capital. And what we have done with the technology and with the licensing is actually bridged both cryptocurrencies and security tokens. So for example, you could on-ramp using crypto and have a fiat balance ready to trade security tokens within 6 to 10 minutes.
Can you, forgive me, Bob, but this is still pioneering stuff. Just, can you explain the definitions of those various terms? Just because I think people throw them around, so what does it mean to say people start with cryptocurrencies?
Yes.
And then they get fiat balances in security tokens. Can you just walk through the nomenclature so everyone knows exactly what you mean?
Absolutely. So when you talk about cryptocurrencies, and forgive me, because indeed these terms get used very generically, right? So truly, a currency should be something that represents a store of value and a medium of exchange. And so if you look at that definition, cryptocurrencies would be things like Bitcoin or Litecoin or, maybe Zcash, some of the true currencies, as opposed to many other assets that are more utility tokens or other types of tokens. But effectively, cryptocurrencies are separate assets from security tokens. Security tokens are effectively, you're taking what is a traditional security, and that could be equity, it could be debt, it could be illiquid assets like, a classic car collection or real estate. And you're wrapping that in a token that lives on the blockchain, or you're fractionalizing that asset into potentially millions or even billions of tokens, and they live on a blockchain. And you would then have investors coming in and holding minute percentages of the underlying asset. And that's a security token. And in our case, being a US broker dealer, we're defining securities on, based on US securities.
Mm-hmm. Okay, great. So just to pursue some of the unpack some of the things you mentioned there, I think I believe it's changing, but there was a perception at some point that, oh yeah, if you want to do stuff involving the blockchain, steer clear of the United States because their regulators either don't get it, or if they do get it, they don't like it. And so you're much better off establishing yourself elsewhere in a friendlier jurisdiction. So obviously you guys didn't follow that conventional wisdom. So can you speak to that?
Absolutely. I mean, the guys who are voicing these opinions very strongly, obviously, are those who've been operating on licensed exchanges for years and have seen billions of dollars potentially flow through their platforms with little to no regulatory oversight. And now they're saying, well, can we just imprint this business model into the existing fabric of United States securities laws? And it really just isn't that simple. Now, on INX's, from our point of view, it was easy because we started from scratch. We started from zero. We acquired licenses first, got approvals before we even offered any trading or listing solutions. So we are just positioned in the sense that we've done this the right way. And you could argue it's difficult for someone like, like a Binance or a Coinbase to kind of go and start from scratch again. But the bottom line is the SEC does have to kind of come to the table and provide a solution, because at the end of the day, this is about investor protections. And there's people all over the world or in the United States who are using these platforms and exposing themselves to various levels of risk. And the sooner the SEC kind of gets its act together and creates the very clear regulations for those existing businesses to become compliant, then the better. But having said that, there is available regulatory frameworks for companies to come in and get licensed for cryptocurrency trading, just like we did, as well as for security tokens, and to do it all under FINRA and SEC and state regulator oversight.
Hey everybody, this is Bob Murphy. Thanks for listening to this clip from the InFi podcast. If you like what you heard and want to hear more, please consider subscribing and share this video with others. We've got new episodes dropping every Friday with more insightful discussions. Stay tuned.